Hey YouTube, this is Zach with Achilles Financial, and we are back with another earnings preview. Today we're going to be looking at FIVERR International Ltd, also just known as FIVERR. Today we're going to be looking as they announce earnings this upcoming Wednesday, October 28th. So this is going to be an interesting one because what we've seen over the past couple of years, or rather past couple of earnings cycles, is that the software companies, the internet companies, the marketplaces are absolutely killing it. And you can see how FIVERR has kind of grown into this approach just over the revenue trends that we've seen over the past few years, where we're actually having EPS estimates that are actually positive. So what we're going to be looking at going into Q3 is, are they going to do better than that estimate of 24? You can see that this range is also very tight. That's more so because they don't have a lot of analysts that are covering their earnings, not necessarily because they just don't have any expectations associated with them. And you can see that kind of trend line here between 23, 24, 25. There's just not a lot of expectation, a lot of changes associated with the company. So let's talk about what FIVERR does. FIVERR is a company that is essentially an internet marketplace in which you're able to go onto the website, you're able to market yourself, your product for a certain task. So the original premise of FIVERR is that you could list your services and you could be paid $5 to do one of those services. Since then, they've really spread out into being able to essentially offer yourself or your works for any number of price points, for any number of services across a lot of different industries. And they just simply take a fee for some of that work. Now, they have continued to perform at a very high level as they continue to change over the course of time. And you can see this over the past 6 months, they've done very well. But even the year to date, again, they did not experience that same crash that we saw back in the early part of the year. Now, when we're looking at earnings, the question is, what is going to happen? What is going to change? How are they going to be affected? I have a lot of faith in FIVERR as an overall company. I don't really like them at their current price point, and you can kind of see that here, where just over the course of this year, they've essentially tripled in value. When we look at some of the potential valuations associated with companies like that, we don't have a lot of good comparisons because we don't have other peers by which we can compare them against. We have this internet and direct marketing retail industry is what they're using here, but they don't really have a huge market by which we can compare that to because that is a very wide industry. What I'm looking at that they definitely have going for them is their gross profit margin. And again, the gross profit margin is essentially what is it going to be after what is the cost of goods sold. So this is not necessarily taking into account the overhead, which you're going to see on the operating profit margin that you can see here. So that is where they still have a lot of heavy expenses on the admin side and on the fixed cost side. How they can drive that down is going to directly impact their bottom line, which you can see here. This gross profit margin is huge. Granted, the cost to sell their services or they're in other people's services is not very high. So that should be kind of that approach. One of the issues that we see here, though, is that they don't really have these metrics by which to operate against because they don't have positive price earnings at this point, and even their price to sales is still very high as well. They're basically high across the board, and that doesn't necessarily generate a lot of happy feelings for me. So I'd really like to see a good, strong earnings to justify this valuation. When we go back to the summary, you can see that this is a company that is currently worth $5.5 billion, and that is based off of the revenue stream that we'll look at here. That's based off revenue of Q2 2020 of nearly $50 million. So they're trading at a very high multiple. The good news is if we can continue this upward momentum right here, that adds a lot of value into the stock. And you can see that they're fixing this idea that they are going to continue to be non-profitable. If they can continue this profit, I think they'll be in a good spot. The question is, are we able to justify this high valuation that's currently been set for them of $155 where they currently sit at today. The other thing that I would highlight is most of the market is down today due to coronavirus cases, due to the election uncertainty that's going to come next week, and all sorts of other items that are affecting right now, including some of the largest companies are announcing earnings this week. So I don't think FIVERR is going to change the market, but it can. If the market is going up and they have good earnings, it's going to explode. If they have bad earnings and the market is doing well, I still don't think that they're going to drop by an obscene amount. However, the options are pricing in a premium. I think this is a company that I'm not a huge fan of in terms of the options, just because they are just pretty expensive, and you can even see that they don't have a lot of options to trade, and that's just because they're not a super high volume company. But they've got very expensive options chains right here across the board. And one of the reasons why I wouldn't necessarily trade them because of that is because you need to be able to get out of your options, but they could do very well. I think the better play here is to buy the shares. I really like the company as a long-term hold. I just don't know if this is the price to enter. I'd really like to see it closer to 140. So maybe they won't have great earnings and you can buy in at that point in time. But this is just a great company, but they have a very high valuation for profitability that doesn't necessarily match it at that point in time, but they could do so moving forward. So a lot of good going for this company. We are currently off the 52-week high by about 16%. If this gets closer to that 150 mark and even under that, I think this is a great entry point to buy the shares. Not a huge fan of the options, but that's all I've got for you today. If you find this content helpful, please leave a like and subscribe, as we're going to continue to be looking at earnings for the rest of this week. Hope you found it helpful. Talk to you later.